a little bit about contribution reporting. This will be in Chapter 6 in the Employer Manual. As you can see, for the current fiscal year, 2019-2020, this was effective July 1 of 2019. The breakdown you can see, you'll see the first one, employee. When the payroll department remits the contributions, we'll break it down to 11.94% for the employee. The health insurance benefit is none for the member. Long-term disability is at 0.17 for a total of 12.11. On the employer, you'll see 11.45 for the retirement pension. Now you see the health insurance benefit. We talked about the premium benefit earlier for health insurance. The employer is paying for this, and for this fiscal year, it's 0.49. And then the employer matches the long-term disability at a 0.17 for a total of 12.11. Now, the alternate contribution rate, if you have a retiree returning back to work, has to be paid by the employer, and that's 10.41%. All of these rates are subject to change each fiscal year. The employers are generally notified by May or June of each fiscal year through secure messaging or email of the upcoming rate change. Now, for the contributions, by law, the employer and employee both have to contribute to the Arizona State Retirement System, meaning the employer has to take the contribution out of the employee's paycheck, match it, and send it to the retirement system. The law does not allow the employer just to pay both sides. Member contributions are required as a condition of employment. So when your employees meet membership, you have to enroll them and start remitting those contributions, and they're on a pre-tax basis. When those contributions do come in, they come into what's referred to as the ASRS depository. Now, your responsibility, each employer will certify on each payroll the amount of contributions they remit. We'll talk about this shortly, but there's the CSR or contribution summary report. Those in payroll that remit that, every payroll and submit that, they're at that point certifying that particular payroll and those particular contributions. Employers can't just wait till the end of the year to give us all the contributions due. They have to stay on that scheduled payment, and they have to remit the contributions. They have within 14 days to submit those to the retirement system. There are two different types of programs reporting system or submitting the retirement contributions. Some employers use what's referred to as the file upload. By using the file upload, the employers are using a compatible software to gather the payroll data, and they merge it and then submit it to the retirement system. The other method is a web-based, where the employer goes through their employer secure account portal, and they go into a specific area for contribution reporting and individually input the information for the employees. Generally speaking, smaller companies will submit the web-based because they may have 5 to 10 individuals, where the employers that have maybe 50 or more employers will use that file upload programming. There is an employer guide on this in the employer reference material page. And remember, when you go to our home page, go to the employers tab, drop down the menu to that employer reference material, and the guide for both file upload and web-based will be on that page. Reporting, again, the pay period end date, you have to submit that within 14 calendar days or it will be considered late, and it's subject to 7.5% interest for those late payments. Any late payments of contributions can be and will be levied after 60 days. Now let's look at related to contribution reporting. If there's an error by the employer, the law allows the employer to make an adjustment or refund. So let's say the employer didn't remit all the proper contributions. They didn't pay enough. The law today allows the employer and the employee within the current fiscal year to do one of two things. One option is if they get the consent in writing from the employee, the employer can make up the missed contributions as adjustments within the current fiscal year. So if a certain amount is missed, they can talk to the employee and state, okay, within 1 to 2 payrolls, we'll take additional monies out to make it whole again and get caught up. If the employee doesn't want to do that, or if the contributions were from a prior fiscal year, then the employer has to go through a system called contributions not withheld. there is a link in the portal, employer portal, that you would have to go into to actually enter the data, the gross wages, the contributions, and rates that were due, and submit those to the Arizona State Retirement System. Then our staff will calculate that and send an invoice to both the employer, and once the employer pays their portion, we'll send a bill to the employee. The employer has to pay their contributions, the employer interest, and the employee interest, where the employee or member would only pay their contributions. Another responsibility of the employer, you need to validate and calculate those missed contributions through that secure website. The role that you need for this is called C&W and Military Call-Up Specialist role. If you don't have this role and you know you need this, please contact your employer administrator. They will go into your account. It's under Maintain Employer Users, and they can give you this role. And again, this service verification application, there's a guide on our website under Employers tab, and go to the Employer Reference Material. It'll give you step-by-step on how to do the contributions not withheld or the military call-up in the system. Now, if you've overpaid contributions to the retirement system, the law allows you to make an adjustment and make a refund. So if there's an overpayment, you as the employer would make an adjustment on your next payroll to take a credit back. The retirement system doesn't actually move money back and forth. You do send us contributions money, but when there's an adjustment back, you take a credit. And once you've taken the credit, you'll be responsible to actually pay that employee the amount that you took back as a credit. Now let's look at service purchase. This is related to a payroll deduction agreement, or PDA. This will be in Chapter 7 in the Employer Manual. Now, as we go into this, you as an employer would ask yourself, well, okay, this is a payroll deduction agreement, but how does this involve me? A little history about the program. You are also a member, just like your employees. There's programs out there where employees can purchase different types of service to add to their benefit. We refer to that calculation to add more service to your pension benefit. This is a way you can do that. How you're involved in is once the employee purchases the service, you would be involved, which is called the payroll deduction agreement. But let's look at these services briefly. Forfeited service would be if you have an employee that had contributed to the retirement system in the past, they cashed out, and now they return to work, maybe with you, and they're now wanting to purchase that service time. They would go through their personal portal, they would make a request. The cost for that would be the refund gross amount plus any interest up to the point they made the request. There's the other public service. Once an employee has 5 years of service or more, they can purchase up to 5 years. And there's military service. Also, once they have 5 years with the ASRS, they can buy up to 5 years. And then you have the leave of absence. If a person is on approved leave without pay, they can purchase up to 12 months per occurrence, up to 5 months. There are some restrictions, so we always recommend that the members or yourself go to our web page, and in the web page under members, there will be a link. When you go to the drop-down menu, you'll see information about service purchase. Also, yourself or individuals who go on their own secure portal, personal portal, they'll have a whole bunch of information about the service purchase process. Now, you as the employer, that individual has made a choice. They can either make a payment by cash, roll funds over from another retirement system, use termination pay, or they set up a payroll deduction agreement, and that will get sent through you through a secure portal. You as the employer will then have responsibility to set that up based on certain payments and certain amounts that's on that benefit, on that notification. You would also need to note this on the contribution summary report. So there'll be a section on that exclusively for that individual when you're remitting contributions for that service purchase, in addition to the regular retirement contributions. Your responsibility, you need to have the PDA and term pay specialist role assigned to you if you don't already have it. Or the employer administrator in your office needs to assign that to someone else. You'll have to apply that PDA according to what the documents say, again, and maybe it'll state a certain dollar amount for so many payments. And you'll need to report that with the other regular contributions. Now, the balance of contract, as I referenced earlier, is in the school system. What we're stating here is for those in the school system, if you have a teacher that's doing a pay reduction agreement and they've set up the balance of contract so contributions are taken out, we also need those contributions for the pay reduction agreement for service purchase to also come out over the summertime with those regular retirement contributions. The member or employee is responsible to make sure that the contract has been set up correctly. What I mean by that is sometimes there could be a delay in getting the contract over to the employer or the employer setting that up. If the employee, for example, wanted the contract to be set up next month, but for some reason it was delayed by 2 weeks, that employee cannot ask you to double up on one payment to get caught up. They have to start when that gets implemented. The IRS does not allow any of that makeup. Another piece of this is the pay reduction agreement is irrevocable. Once they elect this and it's set up with you, it has to continue for the entire employment with your agency. If that employee does move to another ASRS employer within a certain time frame, and we recommend that employee contact our member services to get those specific dates, this pay reduction agreement would get transferred over to the other ASRS employer to be continued. Now, within the pay reduction agreement, there is an addendum in referencing termination pay. So employees can elect to have their termination pay sent over to the retirement system to pay a portion or all of the balance of the pay reduction agreement. You as the employer would have to submit those termination pay to the Arizona State Retirement System. Now, even if, an example, the person had $3,000 in termination pay, but only $1,000 on the pay reduction agreement, the law requires you to give us the full $3,000 if that person elected all termination pay and not a specific dollar amount. What will happen at that point is the retirement system will then receive the $3,000, apply the $1,000, and will send the $2,000 back to you to pay out to the employee. Now let's look at retirement. This will be in Chapter 8 of the Employer Manual. In the retirement processing, you as the employer have a responsibility of completing an ending payroll verification for retirement. Two key components to this is termination versus retirement date. For ASRS purposes, termination would be the last day worked or the last day paid. The retirement date has to be at least a day after the termination date, or can be a date in the future. Sometimes employees will choose a future date because maybe a month from now, even though they left you, they may meet full retirement in another month. So they could delay their retirement date, but they are two separate dates. The new retiree will give the ASRS their retirement date when they apply for their retirement. All we're asking the employer to do is to verify the termination date. Retirement dates can be any day of the week. Can be on the weekend, can be on January 1st, New Year's Day. That doesn't matter to the Arizona State Retirement. Now let's look at the ending payroll verification form in more detail. When you're completing this form, you'll have two different boxes. One of them is the termination date or the last day of ASRS membership. What's key here when you're completing this form will affect your new retirees if they ever want to come back to work for an ASRS employer in a return to work status as a retiree. You'll want to discuss this with the retiree. The termination date to the ASRS means this person is terminating with you and they are severing their relationship with you. It doesn't mean they can't come back to work, but it does mean they're terminating. And you'll give us any final pays. Last day of ASRS membership to us means this person's going to continue working but going less than 20 hours a week. They could still retire if they're at normal retirement, but this could affect if they ever want to come back to work on a return to work status. And I'll go into more detail on that here shortly. Total salary paid. What this means is we would like you to give us a total gross pay within the current fiscal year. So if we're 3 months into the current fiscal year, we want to know what the salary was for those 3 months. We know what the salary was from the prior fiscal year because we already have that recorded. Then we want your regular base pay. So you'll want to give us at least the last 3. You could add additional rows, but You just want to give us the gross pay, the pay period end date, and the retirement contribution. Then if there's any additional compensation other than the base pay, you'll want to enter that information here. You'll give us the pay period end date, the gross amount, you'll give us the payment type, as you can see here, the different types, and the retirement contributions. Our accounting department will then review this and determine what is considered compensation and what is not, and you may have to receive back credit on some of these contributions that may not qualify as compensation. Then towards the end here, you'll have to certify that this is true, and then you'll go ahead and submit this. You'll check the box, employer certification, and submit the box to the button, to submit this through electronically to the Arizona State Retirement System for processing. Now let's talk about refunds. This will be in the employer manual in Chapter 8. With the refunds, the employer will be withdrawing the contributions and terminating their membership with the Arizona State Retirement System. The employee has to terminate with all employers, even those that they're meeting membership and contributing from, and even those they're not contributing from, before they can take a refund. You as an employer, your responsibility, when this person files for a refund, you'll receive an Indeed payroll verification for a refund. You will only receive this if the individual employee submits a refund within the last 6 months of contributing from your agency or school district. You have to verify the termination, and you have to certify that there is no agreement for this individual to come back, either verbally or in writing. Let's look at the Indeed payroll verification for refund. You'll notice here there's a termination date and not a last day of membership, because then when you're terminating for a refund, that's your only option. So you'll give us a termination date, and then you'll give us their final pay and their final contribution with any notation. And at the bottom of this form, you'll have to also check the employer certification that you're stating this person is not coming back to work. You have no written or verbal agreement, and then you need to submit the form. Just for information, if someone in your office does know about this, it's a Class 6 felony.